Good afternoon, team. Happy Thursday. Pretty pretty flat day today. As far as volatility, um, very surprising that the Nasdaq was down over 200 points at one point, and the VIX was down like $1.50. So there's a big reduction in volatility, and which is an index of fear factor. Even though we have this stuff going on, you know, so much lower volume. I mean, look at this. Um, Sorry, over here. The volume drop was even lower than yesterday, on a down day, which on a positive note ended on the high, towards the high of the day. So it kind of, I mean, it was down over like, close to 300 points at some point today. So it kind of recouped, but again, didn't make it back to the nine. Um, I will not be surprised if a million things could happen tomorrow. We come up to yesterday's high, tested, peek our head above it, flush out some shorts, and then bang lower towards the end of the day, and then into Monday. Next week, on Wednesday, let me see if I can do this. Wednesday, it's the Fed meeting. So there's going to be a lot of volatility coming into Tuesday and Wednesday next week. They are expected and already priced in into all this. They're expected to raise interest rates a quarter point. That's been telegraphed. If they go zero point 0.5, they go 50 points, the market's just going to vomit and we're going to tank. If they don't do anything, or even, if they do 25 and they say something positive for the rest of the year, like, okay, we're doing 25 now, but we might slow down into our aggressive hikes because of the economy, the war, or whatever, we're going to just go to the moon. We're gonna have a good 400, 500 point up day, and probably continuing for that week. So I don't know what to expect. So I'm gonna stay on the sidelines. If you notice, my holdings are very small. I'm like 90% cash. I have the SQQs, and I took down 3 today just to book some profits. Made some good money. I still have 5 going into either 4 or 5 going into tomorrow. Um, I still have 1 of the TQQQ puts. I closed 1, and I took 1 off of the Facebook short calls, and I took profits on 1. So I reduced some exposure just because just profit taking. That's my normal practice. I don't let things just ride by themselves. I take profits into strength, and the SLB shares, the 25% that I have left, it's currently profitable, but I did get stopped out on 75% of the share, which is 125. I had 150, so I got stopped out at 125 of them. In scales, 2.5% and 5.5%, trailing stops. But since it did go up during the day, I think total in 125 shares, I lost $42, something like that. So it was like less than 1%. It wasn't that bad. But the ones that I currently have right now, I think I'm up like $10 on the 25 shares. So it's kind of like it's gonna be a scratch trade, no big deal. The USO, let me see here. The USO trade, I still have it. I did not close anything. I was up during the day and then it ended up down a little bit because it went up during the day and then it ended up on the lower end. Lost a little bit. I'm okay. I think I'm down like $100 on those 2 calls. I'm gonna let it ride probably up to like 300 or something like that because I put this trend line here. This is still a higher low than this little breakout right here. So, and the 21 is still holding. See how, like, once it broke above the 50 in this little shelf right here, the 21 never got broken, tested, almost tested and never got broken. And here it came down but never really hit it. So I'm gonna ride this 21 as long as it doesn't get broken. I'm gonna just keep what I have. If it gets broken, then I get stopped out. If this, then that. Simple. I'm not gonna stress over it. I'm not gonna be emotional about it. I'm gonna let it break it. If it breaks it, I'm out. If it doesn't break it, well, just by just definition, this is gonna continue to go higher because it never breaks it, so it continues to go higher. So I'll eventually make a little money. That's it. That's how I'm playing USL. The SQQQs, like I said, I have a few left. It was up a little bit in the day, no big deal. If we go down tomorrow, these will go up again, so I'll make a little bit more money. I'll probably take 1 or 2 off. I'll probably take half off either way over the week for the weekend to further reduce my exposure. I don't want to come into Monday. I don't want to come into next week exposed. I want to wait until the Fed meeting. I might do like something on the actual day if we see like a huge gap down or something like that. Usually when you have a reaction, the first reaction is it's overstated, and then you have a quick bounce. We have a huge down, then boom, we go up again. So if we have one of these things on this huge reaction, I'm going to be selling puts here. And then, if we do this, then I'm going to be buying them back. And then maybe make a quick profit, 10-15% in a day. But again, I have to be nimble with this. I'm not expecting anything. I'm not predicting anything. I'm going to watch it. But what I am going to do, I'm telegraphing this, I am not going to be heavily invested coming into Wednesday. So I am going to further reduce exposure tomorrow, Friday, so I could have a weekend with very, very minimal exposure, either long or short. I don't have an edge. The market timing MT finished at 47. So we're basically halfway. So we could do this, or we could do this tomorrow. Let me go back to the Qs. So I have no edge right now. Hence, my trading it's following that. I am not adding exposure on either side. I added it yesterday because I was not expecting, but the trade gave me this, and I'm going to show you in the 15-minute what I mean. If you remember this from yesterday, this is the 335 level I was referring to that we peaked over it. I had this trend line here and these 2 bars that, if you notice, perfectly coincide with these guys here. And then if you notice, once you break support, it becomes resistance. Actually, let me draw it a little bit better, a little bit longer. So this is the 335 area that we talked about a few days ago. This is that trend line that we also talked about a few days ago. I'm going to run it right through there. And if you notice how beautiful technical analysis works, I'm going to show you now. And this is what I had here yesterday, that I was saying, I'm expecting this, guys. This is my thoughts on the market. This breaks down. We do this. What did we do? We broke down. Again, I wasn't predicting anything. I don't know anything. I'm just reading the chart. And this chart was telling me that the probabilities of this happening was a lot higher than this happening. So I played it accordingly, and I bought shorts and I made money today. Just that simple. That's how you trade the market. Now, this is what I was saying here. How beautiful is this? These 2 coincide with this gap down in the morning, and look exactly how it hits the trend line. Look at that. 1, 2, 3, 4 bars. And then when it eventually breaks it, it comes back and retests. That's what I was saying before. Like when you have a breakout, you usually come back, retest, and then you take off. Or you do the same thing on the other side. You break support, you come back and retest it, and then you break down. You come back and retest it again, and look, it held. That same trend line held here and held here. That's beautiful. Now, this little shelf right here, this little shelf right here, what do you guys think? What are the odds that this goes this way or this goes this way? You guys think about it. I'm not going to tell you the answer, but think about, by reading this chart and what you see develop and what you've seen before here, what this little shelf is going to end up doing. This or this. And then whatever your thought is based on this, you trade according to that. So if you think it's going to do this, then breakouts you take and you buy. If you think it's going to do this, then you don't buy breakouts because the market is not supported breakouts, and then you might even short the market. So me personally, I know what's going to happen. Well, I don't know what's going to happen. I don't know what's going to happen, but I have an opinion based on, just like I had an opinion that this, and I told you guys from back here and this in these bars here that I was looking for this to happen. So I just noticed that there's a lot of choppiness in the market. So like I said, I'm going to stay clear. Tomorrow I'm most likely not going to add any positions because of the weekend. On Monday I'll see how Monday reacts. If we like completely just barf and we have like a 400 500 point down day and the MT's at 10, well, yeah, I'm gonna probably put one or two short puts because it's telling me that's the trade because I have an edge. So if we stay in the 30 to 70 range in the MT, I don't have an edge. And if I don't see any trend lines being broken or anything kind of like acting the way it's supposed to act, I don't have an edge. So even if we have a breakout and the market is falling over, why would I buy that? Just be smart. We don't, as traders, we don't have to actually hit the buy button, to be trading. We could sit on our hands and do nothing, and that's trading. Trading is not hitting the button on the screen, buying and selling. Trading is analyzing charts, looking at fundamental analysis, and looking at growth companies that are setting up and waiting patiently for a trigger. Something that tells you, okay, I have an edge here. The market is not going down anymore. Now the market is going up. Breakouts are working and they're holding. It's been a few days of huge bloodbath down days. Okay, so like this is telling me that I could tip my toe in the water and start going long. Guys, we don't have this. We don't have that. We have this. This is that market I just said. This is that market. This is not that market. We have huge bars, huge bars. It's a lot of volatility. If you notice, look at this. Tight, nice little, up. I mean, you make a lot of money here. Look at this. Small little bars, small little bars. You make a lot of money here. You make good money here. And then when it breaks down, what do you have? You have bigger bars. See? Small little bars. When it breaks down, you get bigger bars. See the theme here? When it starts breaking down, you get bigger bars. When you have the breakout, you got smaller bars. Huge bars. A lot of volatility, a lot of uncertainty, a lot of headwind, a lot of crosswinds. There's the war, there's the Fed rate increase. So a lot of things going on. Hence, you get all this mess here. So I digress. Just be safe. Stay on the sidelines if you're not comfortable. You don't have to buy something every day because it broke out. You have to buy it. Just be smart. And if you are going to do it, small. If a 10% position is your normal position, I would say 2% or 3% position. So in other words, if you're buying 200 shares or something, buy 20, buy 30, that kind of thing. My humble opinion. So some things that are working, surprisingly, BSM did break out today. We had a nice little move on BSN, up 4%. This is remember that the trigger was I think like 1276 or something like that. So that triggered, that worked on high volume. So some things are working. CTVA, that broke out right here. Up 4% today. We had the breakout and it held. Now I don't know what's gonna happen tomorrow, but if you bought it at 52.40, you're up $1.50. AA, that's working. That broke out. This little shelf right here, we had it. I told you guys about it. Right about 81. You're up 3 points, 4% up today. So that's working. Some of these things that I give you do actually work. Surprisingly enough, huh? CNQ, that gave you this back here at 54 and change. This is still working, holding the 9. So this is something that you bought it. Let's say you bought it at 54.50. You haven't. That's a nice little profit there. Um, you know, this. Look at this. This is nice. 40, 44, 45, 9 points, 10 points. This little shelf right here, boom, it worked. That's how you trade. What else is working? Tech. I gave you guys tech a while ago. Right here. Here's my trend line alert. Give it to you right here. About 37, 30 around there. It's at 42. It held the 9. See, even here, even this day when it broke it, it closed right at it. If you notice, it closed right at it. Yesterday, it broke it during the day. It closed above it. Today, we had a 5-point move. See, these things actually work, guys. ARCH up 10% today, guys. 10%, 15 points. Look at this. It held the 9. Look where it closed. It broke it during the day, but it closed right on it. That's technical analysis. Look at this little shelf right here I gave you guys. Boom. This thing, you could have taken profits here somewhere, but again, it's working. I mean, what's this price here? You took it at, let's say, 126, 127. That's a 30-point move. That's a 30-point move from, Fed 20 to now, in 2.5 weeks. That is pretty damn good. Zim broke out. That's working a little bit. Kind of picked his head above the breakout line, and he held. So that's working. And CMRE. See, I gave you guys right here a 15, or 5 or 6, something like that, or 10. You got $1 on it, 6% move in a day. So that could have been taken out yesterday, and then this is good money. So just so you know, whenever you see the red dotted line, means it triggered. It already triggered. It gave me the alert, and it triggered. Okay. When you see the black line, this little black line, that means it's still active. Okay. See all these black lines? Those are all active. They have not triggered. See that red one right there? That triggered. This, I had this trend line here and it broke it. So so whenever you see the chart, so just so you know, whenever I show you a chart that has the black dotted, that means that trend line is still active and it has not been triggered. Whenever you see a red, that same trend line, I usually leave it on. That trend line, that means it triggered. It actually executed. Okay, that's why you see this one red, because that triggered back in this day. Okay. All right. So I really only have 2 that I kind of noticed in my scans today. Just so you know, I go through about 150 to 250 charts every day on my scans. On the low end is 100. On the high end is 300 daily. Every day after the market closes, I go through my scans. I could do 200 charts in like 15 minutes or even less, because I know what I'm looking for. I know exactly what patterns I'm looking for. If I see something like this, I see it's extended, I'm not touching this, I'm moving on. It takes me like a second. So I can go through, a second to 2 seconds a chart. Like the ones that I'm giving you today, GPRK, I look at it, boom, okay, I stop. Because I see a little shelf here. I see it coming up to the breakout, so I take an extra 5 seconds. I draw my trend line. I write down, I want this to take out 1612 on GPRK. That's one that I'm giving you. 1612. It held today pretty good. Nice big cup. It's a little deep for my taste. This is pretty deep. I want it to be a little bit, more shallow. This is nice right here. I mean, you take this from almost 13 to 16, 3 points on a $12 stock. It's huge. So this is a little bit deep, but it's climbing up and it's kind of like consolidating. It's kind of like okay, it climbed up all the way here, and then it's kind of like holding its breath. It's kind of like recouping, and then hopefully it has another leg higher. And if it does, it's gonna break 16, 12. Okay. So again, I go through anywhere between 100 to 300 charts every single night. After the market closes, I do my scans. Takes me about 15, 20 minutes to do my scans. And then another like 15 minutes to like, or 10 minutes to go through the charts and look at, see if anything's setting up for the next day. So I catch anything new that comes in that could be setting up. And then on the weekends, I might do like anywhere between 500 to 750 charts because I run another like extra like 30 scans over the weekend. I do about, I think it's like 10 to 15 scans daily. Like the best ones that I really like that have to do with like any changes during the day, any changes from day to day. And then on the weekends, I have another 30 scans that I run. And then what I do is I run them all. Just so you have an idea. These are the ones that are run daily, and then these are the ones that I run here weekly. And then once I go through all those, I put them all in one list, so I don't have duplications. Like let's say 5 or 6 scans might give me like the same stock because it's kind of has the same parameters. Well, I only pull in that one stock once. So those 500 charts are not dupes. They're like individual different stocks. It's not like I have 500 and like 40 of them are the same ones that came in from like 40 different scans. So once I consolidate them, I go through them, and then I do a little more thorough scanning on the weekends on those, and then that's what I give you the list for that week. And then I run them daily for the setups for that for the next day. That's kind of how my system works, so you kind of have an understanding of what I'm the why and the behind the scenes of what I do. Okay, the only other one I have for tomorrow is ESTE. I want 1531. I want this to be taken out. You see this one here, how it triggered. It took it out, but it was just so choppy here, and today it kind of ended up on the bottom of the day here on high volume. So I'm not trusting this one anymore. Now I want this one to be taken out. Also, it's holding the 50, so that gives me a little bit of positive sign. And this little cup here, if this consolidates sideways for a little bit, I like that because that gives me a nice little handle, and then you could take off, clearing this right here. Great growth, great numbers, top industry group, incredible numbers. ESTE 1531 ESTE. I don't have anything else, guys. I don't have anything else. I don't want to put on anything else. I don't want to give you a ton of stocks because I don't think you should be buying anything. I really don't. Look at this market. This is not a market for you to be buying anything. We might have one or two days like this that you take something in the morning and then in the afternoon it's up like 5 points, and then it comes back 3, and then you take out you get off for you take it off for a profit. But how many? Let me clean this up. Let me clean this up a little bit here, just so you can understand here. How many blue bars do you see compared to red bars? In other words, down days compared to up days. It's a lot more. It's mixed. It is mixed, but it's a little bit more on the downside. And obviously the trend is down. So overall, we are trending lower. This is the channel right here. We got to break this channel. We got to, we got to go here and then continue. But we got this. We probably do this, which will be a 21, that's what it was here. It'll top it, and then until we break this channel right here, and we start creating a new channel going up, we're in a downtrend. And then why would you want to buy stocks on a downtrend? Just put everything in perspective. Okay? All right, guys, have a blessed Thursday afternoon, and I'll talk to you guys tomorrow.